Colin's been carved up and I've got a bomb in me casino and you say nothing unusual?
In this video, which is all about high probability Forex chart setups, we can look at some misconceptions about them and also how to spot really high probability setups and trade them for profit, and the ones I consider the best of all. And I'm also going to discuss black swan theory, which I think is a theory that any investor should have a basic knowledge of, and I'll come to that in a moment. First of all, I'll start off the video with a short clip from the classic film The Long Good Friday with Bob Hoskins. And that quote is a classic. You shouldn't be surprised. He's a gangster fighting other gangs, so that wasn't really unusual. But I always remember that quote. A guy quoted it back to me when I was a Forex broker. He just lost $15,000 on a trade. He had a big volatile spike against him in the USD CHF. I was trying to make him feel better by saying it's just the usual market behaviour. And he quoted the Hoskins quote back to me and said, yeah, that was a perfect chart setup, put a load of money on it, and now I've lost it. Now, the first point that I would make in terms of high probability chart setups in relation to that incident is that the market will ruin the best chart setup time and time again. Even if you've got a trading strategy with an edge, you're going to get winners sometimes bunched together, losers bunched together for a long period of time. Most traders, when they start to face a period of losses, start to lose confidence, want to quit their system, change the signals, and they shouldn't. If you've got a strategy with an edge, you just have to get used to that random distribution of profits and losses. You keep those losses small. I've gone through this in other videos, so I won't labour it here, but you have to be prepared for that when you trade Forex. And I know you see a lot of guys online saying one setup is always high probability, it's always going to work or work the majority of the time. That is not true. So I think just get used to random distribution of profit and loss. Now, in terms of black swan theory, it was made popular by a guy called Nassim Taleb, and basically what he refers to are black swan events which cannot be predicted, that have a major impact, but after they have occurred, people will say, oh, they saw that coming, but it's in hindsight. They never saw it coming at the time. So to give you two examples just from everyday life, 9/11 would be a black swan event. So would the invention of the internet. And those events really couldn't really be predicted. Traders justify why they did occur and why they could have been seen coming afterwards. Okay. Now, in terms of black swans or black swan events, Taleb actually makes the point that they're a lot more common than people believe, and they are. And I think there is a thing that needs to be stressed with black swan events, which is very relevant to Forex trading, which is, some traders see black swan events. I'm going to see them all. Other traders don't. And in pure simple terms, Taleb used the example just to show a person seeing an event coming and someone not. In terms of a turkey being fed for a whole year, came out very happy on the 365th day to be fed. It's Thanksgiving, he got slaughtered. Now that was a black swan day for the turkey, but it's a white swan day for the farmer. Okay, it's a very simplistic illustration. Now, in terms of black swan events that traders never see in the markets, it's normally turning points. Okay, turning points in the market. The market will suddenly turn after moving, in a very volatile way. And going up very steeply or going down very steeply, it'll suddenly reverse. Traders continually will not see that coming. Why do they not see it coming? Well, basically, traders are subject to their emotions, and they basically, when a trend gets in motion, the news starts to perpetuate it, say it's going on forever. Traders don't question it. They pile in, they're making money, they want to make more money, greed takes hold, and then, of course, it doesn't take much to turn the market around. As Humphrey Neal said, the guy who invented the art of contrary thinking, when everyone thinks alike, everyone is likely to be wrong. Now, I always think that price spikes, when you have a universal consensus, you can see them on charts. They're big, volatile, steep moves. They are the best chart setups to trade and offer the best risk to reward. And traders will continually let greed get hold of them. They don't think, they've become part of the herd. And it's the trader who can stand back and think, right, okay, why will this move turn around, that are seeing a black swan event in the markets while others see white swan events. And it's George Soros once said, the more bearish a market becomes, the more bullish it becomes, the less it takes to turn it around. And it's true. And very often, the bullish or bearish fundamentals will peak on really, no change in the fundamentals whatsoever. The market is just exhausted in either direction and then must recoil back. Now, I actually think spotting turning points in terms of chart setups is a lot easier than spotting long-term trends, because you don't know how long a trend is going to go on for. But what you can be sure of, if you have a highly volatile price spike, that price spike will end. Okay, so I think it's a lot easier to spot volatile price spikes ending than it is trying to calculate or sort of predict how far a trend might run. So I think the real high probability chart setups are always on price spikes on charts, and I've covered this in numerous videos. How to spot them, how to basically time your entry. Now, of course, timing your entry is crucial, because a crowd might be stupid or it might be greedy, but it can be very, very powerful. But if you actually learn the right techniques, you can spot those turning points and trade them for profit. And generally, you can have very tight stop losses on these types of trades. And if they do break, then you've normally got a really good profit potential on the other side. I think, obviously there are certain black swan events, none of us are going to see coming. In the Forex markets, there's a lot of black swan events that traders could see if they separated themselves from the herd, and yet they don't see. Now, I just want to move on to one final point in terms of probability. If you actually have a chart set up that looks good, and everyone else thinks it looks good as well, you can see it popularized on news sites and so forth, then that is a chart setup that is probably likely to get ruined by the market. Why? Because everyone's seen it. The market doesn't accommodate the herd for long. Now, in Forex markets, I think the way to succeed is obviously to spot as many black swan events as you can. And by black swan events here, I mean the ones that traders or other traders are seeing as white swans. So I think when we're dealing in Forex, we are dealing in probability. And what we must do is we must get away from the herd mentality, and basically develop strategies which are unique to us, which basically will keep us away from the losers and get us in that winning minority. And I think, in terms of my concluding point on probability and odds are not certainties. Traders want certainties in the market, but you're never ever going to get them. It's just probability. Probability, when you're dealing with it, you're dealing with uncertainty. What you just need to do is just make sure you've got the odds on your side and stick with your plan. Make sure that you've got a well thought out plan with an edge, and you can make a lot of money. So thank you very much for watching this short video on high probability chart setups. Take care. Have a good day.